if you are an accountant or an accounting major, why are you not leveraging your skills to invest? And this is a real question I've had, and it was just kind of a thought I've been kind of thinking of lately just because one of the first things that I noticed when I started at a public accounting firm is not a lot of people were investing, which I found very strange because me personally, the whole reason I got into accounting was so I could understand companies' balance sheets, cash flows, and really understand all those income statements and all the financial statements on a higher level to help with my actual investing. I think there was a quote from Warren Buffett, something along the lines of basically accounting being the language of business. So I found it really surprising when I joined an accounting firm and many CPAs not only didn't invest but didn't even have the slightest clue on it. And I just thought it was a real waste of skills you've already developed. And I just kind of wanted to take a second to talk about this to basically tell anybody who is currently in accounting or in that area, just give you some reasons on why you should start looking to invest and just trying your best at it. The main thing I want to say is if you're learning to invest, one of the most difficult things is just understanding all those financial statements and being able to decipher it so you know if a company's doing well or not. And in accounting, you're already building that fundamental basis you need. You already understand these company financials on a much higher level than the average person does. And this is something I try to explain because if the average person tries to go and pick stocks, it's way more difficult because not only do they have to learn that side of it, the average, let's just say the average American, if you show them an income statement or a balance sheet, they are going to have no clue how to decipher that. It's like a second language. If you already have a degree of understanding of that, you got such a huge advantage versus everybody else. And I just think if you already have that experience built up, why not at least try your hand at it? And you don't have to start off with large sums of money. That's the thing I think people always get wrong. You can start off with small amounts and just build up over time. And if anything, I recommend that. Me personally, when I first got out of high school, I started investing. I think I was making maybe 500 a month. I was working part-time at a Family Dollar while I was in community college. And I'd invest like, maybe $50 every paycheck. Very small amounts of money, sometimes less than that. But it was overall a good thing because my returns weren't too great that first year with me still learning, still making a lot of mistakes. And it allowed me to slowly build up. And by the time I was starting to put in real money, I'll say substantial money, my returns started to improve to a point right now where I'm outperforming the market. So you don't want to start out with large sums of money. It's actually better to start building slow so you can make your mistakes and learn. At least for me personally, I learned so much better from correcting mistakes than I do just, I guess, reading theory on it would be the best way to explain it. Perfect example I can give you on one stock I invested in where I made a mistake that now I've learned from it. There is a company called Turkcell. It was a telecom company in Turkey, and the company basically not only had like a bunch of 5G, did most of the wireless for there. They also were the leading telecommunicator provider in Turkey. They had kind of their own shipping. They had their own cloud service for storing, and they kind of had a monopoly on the area for it. And you would look, and I was looking through these investor presentations, and I was looking through some of the annual reports they're filing, and their net income growth and revenue growth were both extremely good, like double digits, like 30% some years. And the multiple on it, I'm trying to remember the exact one, but it wasn't too high. It was like maybe an 11 price to earnings. It was somewhere around there. It was a lower price to earnings. And in my head, I'm like, okay, it's trading at this price to earnings substantially below what the market trades at, but it has this growth much higher. This is a steal deal. How is nobody seeing this? And that's all I thought there, and I didn't look at anything else besides that and the growth of the company. Go down a few years later, I eventually did sell out where I think I broke even or maybe made a slight profit, but Really, barely anything. I don't even think I kept up with inflation on that one. And the reason being is because something I never looked into is because I was investing in a company outside of the US, I didn't look at the macroeconomic factors. So with this company, if you don't know, Turkey's been having hyperinflation for quite a while right now. So yeah, maybe they're growing their net income by 30%, but when your inflation rate is like 20 something percent, 28%, how much are you actually growing? You're really not growing 30%. A lot of that's just due to the currency devaluing and the prices rising because of that. It's not true growth. And it was something I had to learn, and I'm glad I went through that because now I'm much more cautious. I haven't invested in another international ever since then. But if I do, that's already something in the back of my head that I'm thinking like, okay, this is something I got to keep in mind for the future. And it's just little things like that that you'll start to pick up and get better. And even if you decide you don't want to do individual stock picking for whatever reason, it does take a lot of time. I say at least try a little bit. If you already got your accounting basis built up, try to try your hand at it for just like a small amount of money on the side. See how you do. And then if you don't like it or you're not comfortable with it, that's fine. Your returns aren't doing good, whatever. That's fine. You can just keep doing index funds, but I'd recommend at least a small portion, giving it a try if you already got that knowledge built up for how to read income statements, balance sheets, and just the accounting fundamentals. Because if you've ever played around with a compound interest calculator, like the difference between a single percent going like years out when you compound that, it's the difference between millions of dollars. Like, it's a lot of money you can make just by outperforming by a very small margin. And so that's just basically the base of this video. I wanted to explain, just if you already spent all this time learning all these accounting concepts, just go ahead and try with maybe a small portion of money. See how you do. Try to learn it. Read some books on it. If you're looking for good books that you can read, my personal favorite, I really like One Up on Wall Street by Peter Lynch. It's not as technical as some other books, but it gets you kind of more in the the framework of thinking. Of course, The Intelligent Investor by Benjamin Graham. That one is a classic. Everyone recommends that one. There's also one that really helped me that's a little easier to understand than that one is The Little Book That Beats the Market. That one is by, let me see, John Greenblatt. That one's a pretty good book as well, so I'd recommend that one. But yep, just I'd say at least try your hand, try it a little bit, see how you can do with just a small amount of money, and if you find that you're pretty good at it, you're comfortable with it, you can slowly start building those amounts up and hopefully just make it to where you're able to make a ton of money and you don't got to worry about retirement later.